Good evening, everyone. Hope all of you are safe at your home or offices, wherever you are. Welcome to the webinar on importance of life insurance in financial planning. This is Parag Mehta this side. I head the insurance products for IIFL Securities. Topic for today's webinar is importance of life insurance in financial planning. To take us through in details, let's invite Mr. Vivek N, who is a Senior Vice President of Protection Strategy with ICICI Prudential Life Insurance. Mr. Vivek has 19 years of experience in life insurance industry in developing and delivering business strategy, product pricing and development, corporate sales, key accounts management, and distribution management. He heads the entire protection and credit life business in ICICI Prudential Life Insurance. So there will be a Q&A session at the end of the webinar. For Q&As, one can share the questions on Q&A tab. And now I will hand it over to Vivek, who can take us forward. So over to you, Vivek.
Thank you, Parag. Audio check is complete, so I don't need to repeat the most common things which we usually do. So very, very good evening to all the members on the call, and wherever you're joining from, on your mobiles, on your laptops, iPads, or from your homes or on the street. Firstly, I'm wish you that I hope all of you are safe before I start, and wish you all the very good health. With that, the brief that I have is that I will spend around 15 to 20 minutes on the presentation, where we will talk about briefly about what the current scenario is, how is the importance of protection, what is the reason to have protection plans, what are the considerations you should consider for protection plans, and of course, I will also give you some features that you should consider while buying protection plans. Post that, we will go into questions. Those are the most interesting parts. You can clarify your doubts which are there, which you have, whether it is even if it's a very simple doubt, or whether you think it's very stupid, don't worry about it. Please go ahead and ask the question. We are here to answer you the questions. And I'm sure that others also on the call will benefit from your questions. And that's the structure of the call. So over from there, let me just start off. So if I can move to the next couple of slides. So firstly, I want to tell all of you that for the last 5 months in India and in many more months across the country, there has been this COVID pandemic, and there has been a huge concern for life and life in terms of in general. And people, as you can see, are contracting the virus, many of them surviving, and few of them unfortunately are dying. Aziz, can you move to the next slide, please? Yeah. So this has been the way we are, lockdowns and unlocking the scenario today. This is not just in India, but across the globe. There's not one country which has been spared. India, being one of the largest country, both in size as well as economic size, has also been impacted. We are not isolated. It started off, and especially in metros like Bombay and Delhi and other locations, Chennai and so on and so forth, there has been a huge influx of cases. But the good news is that there has been a lot of control and people are recovering. The unfortunate part is that there have been a lot of deaths. Like, is this scenario going to change? Is this things going to become better? I'm an optimist. Yes, it will change. But what has this taught us in the near current scenario? Life has never been valued like this ever before. So people have realized the importance of their lives, securing themselves, securing their families like never before. Especially the people who are in the middle and higher middle class, as you could say, and the affluent class also have become extremely aware that it's important for them to secure themselves, and demand for both health and life insurance has significantly increased over the last 4 to 5 months, both in terms of the number of people wanting to buy and buying protection products, both health and life, has increased tremendously across all channels, I would say. And I'm sure that many of you who are on the call, who are there on the call, are here to understand, are definitely wanting to buy life insurance, or wanting to know why should I buy life insurance and how much should I buy life insurance. So I'll spend this time for the next few minutes to explain this part here, right? Because that's very important for us to understand this. So it's a very, very simple, there are a lot of uncertainties in life, and today the uncertainties in life has become very, very large. One is that people, the chances of death have been accidental death, natural death because of heart attack, stroke, cancer, or any other illnesses. But now with the pandemic, uh, the all of this has become significantly heightened. People with comorbid conditions, or people with diabetes, hypertension, have high, or any other kind of disease, are having a very difficult time. Not only that, people in the age group of around 30 plus, who are there, who are having lifestyle issues like obese, so on and so forth, are also finding it extremely difficult and challenging when it comes to the morbidity conditions. So in a way, this has made each one of us think about life insurance and health insurance in a big way. Can we move to the next set of slides, please? So what is it, that, have you considered in the past? I just want to give you a flavor. So the most common thing I'd like to talk about is the vehicle insurance. So whenever you bought a new car, or whenever you bought a new mobile phone, which is there, people always bought along with it a life insurance, which is there. Sorry, insurance cover that is there. So for a car which is valued of a 4 lakh rupees, people would end up paying 40,000 rupees or 30,000 rupees, which is there, and buying an insurance product, right? If it's a mobile, if they bought a 30,000 rupees, they would spend 300 rupees or 400 rupees for the case or the cover that is there to protect the phone that is there. So when you buy a vehicle, or two-wheeler, four-wheeler, as the case may be, immediately people end up buying an insurance cover. But what about the most important thing today about you? When you are there, you're not even thinking about yourself, right? This has been something that people have never thought about. But today you're thinking about it. Yes, you are the most important person who needs to be protected, both for life and health. That is what I would like to tell you. And I'm happy that if you're on this call, you have a definite thought that you would like to go in this direction and purchase a life insurance product. So let me give you the technical part here of, why you should look at a life insurance product. You as an individual, it could be an individual who's married, single, either a husband or a wife, who are the breadwinner of the family, or the joint breadwinner of the family. We are all here to actually have a good lifestyle, have a good life with our children, with our parents, and so on and so forth. We dream of a few things. We have aspirations for a few things: buying a car, buying a house, ensuring our children get a good education, creating the wealth for our retirement, ensuring our child gets married and having a good life, and retiring peacefully. We don't see ourselves anything which is there, which is different than that, right? But what if either one of you as a breadwinner is not there? That there is a big void. And what is that void? Why is there a void? Uh, Definitely, you as an individual, if you're not there, your family suffers the most emotionally. But in addition to that, what cannot, which the family suffers, is the financial burden. Because every day today, every month today, you are the breadwinner. You bring in money to the family, and that money is used for your family's basic needs. It's used for your family's lifestyle and for the future of your children and your family, right? So if I were to consider that scenario, if you were not there, and I want to give you a drastic example, right? Just take to the say previous slide. Uh, so if I give a drastic example, the example that I want to give you is that each one of us either gets salary, or we run a business and we get income every month, possibly every other month if you're running a business, and that money is in the bank account. So what if that you did not get salary for 1 month? What would happen? What would happen to your home loan EMI? What would happen to your child's fees? What would be happening to your grocery purchase? What would happen to a lot of these expenses that you're incurring, right? Think about it. What would happen if this thing you did not get money for 2 months? If you did not get salary for 3 months? What would happen if you did not get salary for 6 months? What would happen? Now think about the same situation if you are not there. What would happen to your family, right? This is a big if, and this big if is definitely going to have an impact to your family. The question that I'm only pointing out here is that there is a financial burden on your family because you have an income that is there, and emotionally, of course, your family suffers. At least financially, your family should not suffer, right? The question is, it'll happen to somebody else, it will not happen to me. That seems to be very, very common thought, but in reality, nobody knows what's going to happen to somebody either by accident or by illness, and now currently corona, and what can get impacted, right? So, in a moot point, financially, you can protect your family in your absence. That is the main point for looking at a pure term life insurance. Let's move to the next slide. In the pure, so what does this money help you do? You can move to the next slide after this. I'll articulate it there. Pure term life insurance is a very, very simple contract. You pay a certain amount of money, and in the event of death, you will get a large amount of money. So, next slide, please. So, it's a contract between the life insurance company and you as an individual, where you pay a very, very small amount of money. In this case, you look at the example here, for a 30-year-old, he's paying around 37,000 or 38,000 rupees per annum, and he gets his family gets a life cover of around 2 crores. It's a small amount of money that you pay every year of 38,000 rupees. And in the event of any eventuality, your family gets guaranteed 2 crore rupees. This is a simple way that pure term life insurance works. And why is it called a term plan? Because it's done for a specific, the coverage is for a specific amount of time or a term. The policy term in this case is up to age 85 years. You could take it up to 60, 75, 85, as the case may be. And you pay a small amount of money every year to ensure that if anything happens to you, your family gets the money. It's as simple as that. That's why it's called a pure term life insurance. There are other variants of this plan. I will come to that. But for the purpose of repeating for you to understand, small amount of money such that you secure your family against financial crisis, and you get a large sum assured in the event of death of an individual. The only exclusion here, of course, is suicide in the first policy year for all term life insurance products which are there. But I have to tell you one thing, that when you take this contract, as you know, you have to disclose whatever your health conditions are clearly, and you have to tell the insurance company that I am hale and healthy. Many a times you'll have to undergo a health checkup, and you have to just fill out a set of questions which will disclose all details about you as an individual, and your health and your financial status. That is required, and the insurance company underwrites you, or basically, in simple language, accepts the risk which is there and gives you a cover. After that, you're financially secured, and you have peace of mind that even in your absence, you can cover your family, which is there, right? Your family is taken care of. Let's move forward. I think that's very, very simple for you to understand. There are other, the next important question that each one of you will have is, how much life insurance should I take? And it's not like a preset thing. I should take X amount of money. I would have said that a lot of people say I should take X amount of money as life cover. Let's say 10 times the cover of my income I should take. That's a very rudimentary way of looking at it. But if you want to look at it, I would say you can ask your financial advisor, IIFL Securities staff, to kind of guide you in the process. I will only throw light on this way of you should consider what you should consider. Let's move forward. So you should consider what is your who are the people in your family who's there? What is the income that you have? what is the expenses that you incur towards your daily livelihood. This is something which you have to consider. Let's move further. I think I can go to the next slide. Yeah, let's stick here. Yeah, thanks. So how many people in the family do you have? What are the kind of expenses that you incur for basic necessities? What is the lifestyle that you have? What is the amount of money that you have for your children's education, that you need for your children's education? What do you want to leave aside for your retirement, which is there? That's, and then finally, how much can you actually afford to take? So that's the other thing that is there, right? These are the lot of things that is there. And what we say, how much life insurance do you want, is simply said death benefit or sum assured. This is a common language used in the industry. So don't get worried about this jargon. So it's called either life cover, death benefit, or sum assured, right? So sum assured is there. Let's say I want 1 crore, 2 crore, whatever the case may be. So the what goes into this is basically a function of how many people I have in my family. I have 2 children. I have 1 child. I am incurring every month 40,000 rupees as expense or 30,000 rupees as expense. My lifestyle for my family is 50,000 rupees a month, so on and so forth. I have a housing loan of a crore. I have a car loan of around 8 lakhs, so on and so forth. All these considerations are to be considered. And as a basic, just move on, please. As a basic thing, you should ensure that your loans are covered first. If you have a housing loan of 50 lakhs or a crore, ensure that you minimum take a crore of rupees of cover, because that's like the most important thing first to cover. If you have not got a loan, any kind of loan, and if you're not covered it, you should cover it first. So what happens is that if you have a housing loan, you have EMI. If you have a crore of housing loan, 50 lakhs of housing loan, you will have 50,000 rupees as EMI. I'm just giving you an arbit number. In the event of anything happening to you, that is the most difficult scenario, because every month your family will have to cough up 50,000 rupees. And that is the same house that your family lives in, right? So your family is protected by the house and by the income and the EMI that they are paying. So you have to first ensure that the minimum housing loan value is covered. That's the first thing you have to consider. Whatever the loans may be, please take the whole, aggregate all the loan values that you should consider. Second is, of course, the amount of income that you're getting towards spending to your family, that I will explain in the next few slides, that you should consider, right? So, and of course, if you want to leave behind amount of legacy for your family, some part you should consider for that also. So typically up to the age of 35, the maximum that you can go to, which we compute and we ascertain, is around 25 times your annual income. That is what is computed, which is there. If any kind of math you do, it will work out to that. So we have done some kind of outer ranges. You should consider that. But industry is very funny. Industry, the maximum most popular point is 50 lakhs or a crore of rupees. So average comes around 75, 80 lakh rupees, right? So why is this so popular? Because the people end up buying a very small, okay, I need to buy life insurance, about 50 lakh rupees. So if I want to buy, okay, let's take 1 crore rupees. But let me tell you one thing, buying 50 lakh rupees and buying 1 crore rupees or buying 1.5 crore rupees, the differential cost, volume discount, right? So if you buy 10 commodity, 10 things of one product, and you buy 20 things of the same product in bulk, you get a smaller discount. So similarly, as you increase the sum assured, you get a better discount. That's the first thing I want to tell you. So you should keep that in mind. And also you should ensure that when you buy it considering all the factors that I told you. So I'll give you a simple example. Let's move to the next slide. The basic that you should consider is somebody who's 35 years old, okay? And he's got an annual income of 8 lakh rupees, which is there. And he's, in this case, his expenses 50,000 rupees per month. And his sum assured he's opted for is 60 lakh rupees. This is the current scenario. I usually find this 50 lakhs or 60 lakhs very common. But now let's just do the simple mathematics. He is 35 years old. Up to retirement until his children grow up and his wife is also, they get to the retirement. They have 25 years of expenses left, right? If I simply do their expenses of 50,000 rupees per month, right, into 12, which is per month, which is there, and 25 years, which is there. 50,000 into 12 is for every month, and annualizing that, and 25 years ahead, the amount that is required is almost 1.5 crores. So if you end up taking anything lesser than that, 60,000, you have actually had an underinsurance, right? That's the big mistake that we end up doing. You could have taken earlier, it's directly you could have taken a 1.5 crore. Now what happens? That is income currently is 50,000. Next, after 4 or 5 years, his income becomes higher, right? So again, you have to take another product again, and then the price is obviously your age is increased, right? Then the value also automatically, the other thing that happens is your income is increased, your requirements have increased. So again, you will take a larger plan. Again, you will buy under insurance. So my recommendation to all of you is that please take the right sum assured when you are looking at it for the first time. And as you look at a higher sum assured, you will get better discounts also. Sum assured increases, you get a better discount also. I want you to know that, right? Let's move further after this. So people who think that, look, I don't want it today, maybe I'm okay today, I'll buy a few years later, right? If you were to consider that, I just want to give you an example. I put a very big value here deliberately. Just go to the next slide, please. So somebody who's 33 years old, if he buys a product for up to the age of, a coverage term up to age of 55 years, next which is 85 years, his premium is 83,000 rupees. Let's say he waits for another 5 years. The same value he'll have to pay is around a lakh of rupees. And he waits for 10 years for the same benefits. The benefits you can read on top, life and CI and ADB, whatever the case may be. You have to pay 1.3 lakh rupees. So for a 10-year delay, you're pretty much going to end up paying almost around 4.5 lakh rupees more. And you're not getting the coverage also. Please remember that. So in my view, it is good to start early and get a longer coverage. Today, coverages are there up to 85 years and whole of life up to 199 years. So you can go start early, get the benefit early, and get coverage up to the age of 99 years. So this is, you should not procrastinate. If you think that if you can't afford the plan, then my suggestion is to reduce the term to up to the working years of 60 years, but definitely take a higher sum assured. That is my recommendation. But definitely look at the cost of procrastination. The more you procrastinate, the more the cost it becomes. I'll give you my personal example. I have initially bought a term plan of around 1.5 crore rupees, plus my company offers something which is very, very small. Then I subsequently took another 2 crores. Then I took another 5 crores. This is, and I still feel that I've taken less than what I should be have taken. Economically, I think that's what I've done. But it's important to take the right sum assured. And if you've already taken a term plan and if your income is drastically increased, do not hesitate to take more because your lifestyle is increased. So you earlier was an individual married who was there, then you had children, then you bought a bigger house, you have a bigger EMI, then you have a lot of lifestyle changes, and you're used to a particular lifestyle. Your children go to a particular type of school, which you obviously don't want to change the school if anything becomes bad for you, right? And depending on that, lots of things have changed. So in line with your income, please take a right sum assured, which is there. That is my recommendation to you. The next question people come to me and ask, why should I just buy a pure term plan? And I think there's been a recent survey of Swiss Re, which clearly says that only buying a pure term plan people don't prefer. And that's not only my voice, it's a voice of others. It's good to take a plan where you get a comprehensive coverage. So that I think is important. In life insurance companies and general insurance companies offer you these plans, but life insurance for companies can give you a same guaranteed rate for a period of, and in our case, we can offer a guaranteed rate of 30 years for even the CI plan. So can we move to the next slide? So what is more, next slide, please. So what is more important is that death is not the only problem. There is disease, right? Disease is, you get, the most common disease is heart related, heart attack, angioplasty, then you have cancer, then you have kidney failure, you have stroke, and so on and so forth. So those are the lots of diseases which kind of create a problem for you, and the incidence of some of these diseases like heart ailment or cancer is very, very high. Especially, let's say, an angioplasty today is very, very common. So if somebody is closer, with our lifestyle and habits, somebody is closer to 50s or 45s and 50s, we clearly see people having a heart blockage and going through angioplasty. Plans that give you that coverage are very, very good. Plans that give you a bypass surgery coverage, very, very good. So not just a life cover plan, but any plan that covers you for disease, which is there, is very important. Or angioplasty, of course, is a plan that kind of very good. And disability, again, disability because of accident or because of illness, somebody is not able to walk, somebody is not able to work, somebody is not able to kind of function normally. That is a disability which is there. That should also be kind of part of the plan. So in a way, The way I call it is a 3D plan. Death should be covered for sure. Disease because of any kind of critical illness that is there should be covered. Heart related ailments, most of it should be covered. Cancer related ailments, most of it should be covered. And disability should be covered. And this is a bundle should be covered. And if you have something which can give you a guarantee for a longer period of time, it gives you a lot of support. Here you can also get, let me also tell you that you can get critical illness plans from general insurance companies or health insurance companies, but the plans are for a shorter period of time. And life insurance companies give you coverage up to a longer period of time, 15 years, so on and so forth, or the rates get changed every 5 years or 10 years or so and so. But in our case, one point I'd like to highlight is that the critical illness price and the accidental price are guaranteed for a period of 30 years. So if somebody is 35, 40, for the next up to age 65 or 70, there is no change in prices. That is what I want to tell you, right? The price is guaranteed, which is important for you because healthcare costs are going to shoot up, and you don't want your premium to move upwards when things have become very, very bad. You want the price to be remain constant. So all the products, the product that I'm going to talk about is that the premium that you're going to pay for towards the life insurance premium and the critical illness premium, the premium is constant, fixed today, and it's constant throughout the policy term, whatever the age may be, right? So that's one thing I will tell you. Uh, I'm on the slide of accidental death benefit. Accidental death benefit is very, very common for people up to the age of 35, 40. After 40, we find that accidental death benefit is lesser. Accidents are lesser, and death due to accident is lesser. Death due to CI from 35 onwards, very, very high, right? Or CI incidence is very, very high. So we strongly recommend for people below the age of 40 to take an accidental cover, where simply in the event of death, if the benefit, if you have taken a 2 crore plan, you'll get double that, you will get 4 crores. And the cost of the accidental benefit rider, which is there, is very, very nominal compared to any health and general insurance company. And that's the thing you need to notice. It's a very fraction of the cost. So it's very small. Let's move on. So, in a way, you're covering yourself against all kinds of deaths which are there. And what should you kind of illnesses that, the things that I've summarized in the slide is the product that we offer you 34 critical illnesses, including angioplasty. Angioplasty up to 5 lakhs, which is very, very common today. Angioplasty is also covered. The premium is guaranteed for the entire policy term for however long you take it there. And there is nothing called as in general insurance plans. There is, so somebody gets a heart attack, person has to survive for 15 days. If he does not survive 15 days, then the benefit is not paid out. As simple as that. So that is not such a great plan. In our case, we don't have something like this. And usually you don't get coverage up to 1 crore. In our case, for critical illness, we offer you up to 1 crore. I think this is one of the best plans in the market to cover yourself comprehensively. I think you should consider it. That's my thought on this. Let's move forward, please. So in a nutshell, you are covering yourself, which is there, because this is, if you look at globally, if you look at Asia, death is not just the only biggest killer, but critical illness is another big killer, and disability is a big killer, and drains your pocket if critical illness is there, and your family suffers a lot. All the bank balances, cancer ho gaya, to pura bank balance khali. You need a plan like the plan that we are offering, where in the event of critical illness, if you have a cover of 50 lakhs, straightforward, no questions asked, 50 lakhs is paid out. That's one unique thing about the plan. So somebody gets a cancer, if you paid for 50 lakhs for critical illness, flat 50 lakhs is paid out. No questions asked. This is over and above your normal Mediclaim plans that are there. So this money is given to you. You don't have to stress about it. So if you have a housing loan, take the money, settle the housing loan, use your Mediclaim expenses to settle, get your treatment done, or use the money to treat yourself and recover back up. So you at least have a peace of mind completely to ensure that in the event of any critical illness, you get that lump sum, no questions asked, and it's paid out to you on the event of any critical illness. There's no medical bills to be provided. That's the difference which is there. You have let's say, you have a heart attack, and your doctor gives a summary that this is what the heart attack, this is what has happened to the patient, to you. There's a heart attack which is diagnosed. On diagnosis, this money is paid to you. That is the advantage of this critical illness plan, which is offered by us. Just that point I wanted to leave with you. And you don't have to give reimbursement bills, nothing. Just that you will just give the doctors, discharge summary of this is what is there, and this is the plan, this is what you have suffered, and this money is paid to you. Yeah, let's move further. Yeah. So I thought we just want to put some points here in terms of what should, there are different ways to look at it. So I will just go and take you through some of these. At the middle of all of this is 3D plan, which is death, disease, and disability. But many of you have different reasons to cover yourself, and you may have some kind of plan or the other. So I will take you through these different plans which are there in brief. And And Aziz, I won't go through the rest of the slides on depth, but we'll anchor this around here, right? Some of you say, so I will talk first from the IPS Income Protect. So this is a plan which is a variant of the iProtect Smart Plan, where under this plan, whatever your income is, if your income is 50,000 rupees, a lakh of rupees per month, two times your monthly income is paid out. And you would roughly pay around 1.5% to 2% of your monthly income towards the premium. That's how this product is designed, and that is the benefit. So the benefit is simple, saying that if your income is 1 lakh, in the event of death, you will get, your family will get 2 lakh rupees per month for the next 10 years. That is how the plan is designed. There are multiple more variants. So this, in a way, is a plan that ensures that your income, whatever is there, the full income is protected. So because I was telling you, we should consider this thing income, to protect your income. So we have kind of designed this specifically. So whatever your monthly income is there, two times the monthly income you can get. You can also choose lesser or more, whatever you want. You can choose that. Two times your monthly income will be paid for the next 10 years in the event of death. Right? That's how the plan is designed. You also have the benefit of adding a CI and so on and so forth, which are there. So that's again there. And even in the event of terminal illness, in this case, somebody's like terminally ill, gets diagnosed terminally, this money is paid out. Right? So this is a very good plan. If you want to protect your income for your family, you don't need to break your head. This is the plan that is there. This you may interest you. You can consider this. Right? You can get guided by the IIFL team. The managers know about these plans. They will talk to you about this. The next plan which is there is the IPS Home Protect, iProtect Smart Home Protect. So you have a housing loan and you're paying an EMI. You have a housing loan of 50 lakh rupees, and you're paying an EMI of 50,000 rupees. This is for a tenure of 20 years. So in this plan, what will happen is that in the event we will straightforward ensure that your 50 lakh rupees is covered. And in the event of your death, this 50 lakh rupees is paid out either death or in the event of critical illness, this money is paid out to the bank or the NBFC where you have taken the loan. And also, in addition to that, whatever your EMI value is there, that money will give to your family. So this is there for the next 10 years. You will give the EMI to your family. Don't need to worry. That becomes income for your family. And the home loan is settled. That again is a different plan. It is there to protect you against the home loan which is there. So you can consider that. The third plan, which most of us like to do, is that this is a plan which is a income iProtect Smart Child Protect. This is designed to cater to two things. Number one is the child's education. If my daughter is basically, if I'm spending 5 lakh rupees to 8 lakh rupees towards my daughter's education and other expenses for every year, this will ensure that my daughter's education is paid out for the next 10 years, and I also get a lump sum which is there for the future. Lump sum which is there is paid out, such that even if I'm not there, whatever happens, my child's education is taken care of, and there is a lump sum for marriage or in the event of any future further studies which is there. That is an IPS Child Protect. Many of you would be interested in that, so that you can take independently, that you can take separately, that can be designed towards these lines, that can be done separately. It's a good plan. Here you also have an option that every year, in the event of any eventuality, every year the income also will grow because expenses for education increases. There also you can increase the education cost by every 10% every year. So this plan has got that benefit. So that's a very different plan which is there. So I'll come to another plan which is truly for the IPS Read Protect, which is there, which is truly a plan which is there for extremely affluent people, super rich. Here we start with minimum sum assured of 5 crores. We can go as high as around 100 crores. So for people on this segment, they think of this more as an investment. So if I were to do, typically and legacy planning. So this plan covers individuals up to 100 crores. you can get a coverage up to the age of 75 or 85 years, where the cover is, usual life expectancy is in India is up to the age of 70 years. So this plan covers you up to the age of 75 years and 85 years. And look at this. You pay around sum assured for a. I'm just giving you a number here. Roughly around 5 to 6% of the total sum assured you pay, and you get a large sum assured of, let's say, 10 crore rupees. You leave behind for your family as a legacy, tax free in the event of your death. This 10 crore can be higher. For the truly affluent, you can look at 100 crores also. Premiums are recalibrated based on that. And this is an exclusive plan. So I think this can be also talked about separately. So for another segment that we have is for people who say that I only give money, I don't give money, but get any money back, right? So I want my money back. What happens to my money? I'm only giving, I don't, when I'm living, I don't get any money back. I want my money back, and anything happens, my family can take the money. So many of you will feel that a lot of us feel that just putting money and not getting anything back is not a good thing, especially when you're living. So IPS money back is as the name suggests, a very, very simple plan that you pay. There are multiple variants under this, and I will tell you one of the variants under this, which I'm talking about, and you can get more details after that. Is that you pay for, for 5 years, 10 years, or up to the age of 65. I'm just giving you an example. If somebody is 35 years, he can pay up to the age of, for the next 10 years, or he can pay up to the age of 60, up to the age of 65 years. And he can get a life cover of a crore of rupees. I'm giving an example again. And after, if he survives up to the age of 60 years, the money is returned to him, which is a large sum of pot of money, whatever he's paid is returned to him. And even after that, up to the cover, up to the age of 85, his life cover continues. So in a way, up to the ages of working ages, you pay the money, you get a coverage. In the event of your death, your family's lifestyle is protected. And if nothing happens to you, your money is returned when you are about to retire, and you can use the money for you as a retirement kitty. But your life cover continues up to the age of 75 or 85 as you choose, and you can be rest assured that this you can leave as a legacy for your children and your family. That's a very good plan. You should consider this. There's a traditional money back also that you pay for a regular period of time for up to the age of 60, and whatever money you paid, all that money is returned back to you. That's another traditional plan. But I'm just talking about it, and because in the interest of time, we can't go through all these plans. We'll talk about few things only. Um, IPS joint life is another plan which is there, which is a plan where both husband and wife is working, or you also have a housewife, and you believe that obviously even all of our spouses today, many of our spouses today are working or at home, but they're extremely educated and they have a economic value. And even with when they are not, there's a huge financial loss, not only emotional loss. So we offer a plan where both husband and wife can be covered under the same plan. That's a product option that is available. So you and your spouse can be covered together. And finally, for people who are lots of NRIs in India today, many of you are here, and maybe NRIs on the call today. The price of a protection plan in India is at least 40 to 50% cheaper, 40 to 50% cheaper compared to most developed countries or developed Asian countries like Hong Kong and so on and so forth, or the USA and so on and so forth. So it's a good time for you, or Dubai also, for instance, many of them come from Dubai. It's a good time for you if you're in India to purchase this plan. My recommendation to you is to take a very large sum assured, even if it means that you have to undergo a medical. So this is the plan that you should consider. So in a nutshell, there are multiple sets of plans, and my intention is to ensure that you are clearly aware. Just go to the COVID slide. I also want to tell you that the all our plans, including iProtect plan, if somebody contracts COVID, the COVID is covered, right? You don't have to worry about it. All our plans ensure that we cover in the event of death due to COVID, money is paid off. We don't have this exclusion for COVID. I don't have to worry about that, which is there. So in a nutshell, if I were to say, it's very, very important for you to, in the current COVID scenario and in the kind of lifestyle that are there, you can, you will have to look at the scenario where you are protecting yourself and your family against financial loss, against the event of death, disease, and disability. Take the right sum assured that fits you and your family take the right sum assured after considering the value of your loans, after considering your expenses and income which are there. This is the bare minimum you should take. If you were to consider taking additional plans for your family which suit you, like the home protect, I protect, smart home protect, or child protect, or income protect, please go ahead and consider them, and recommend plans for you. And before I conclude, many of you would consider lots of other plans in the market which are there. So my only recommendation to you is that look at companies which have, these are plans which are there for 90 years, 50 years, 60 years, and the coverage of the plan is for such a long time. Number one. Number two, you have to look at in terms of you are not going to be there when the claim happens. You have either your intermediary or IIFL is going to be there who are going to settle your claims, right? So it's important to look at brands which are stable, which are very there for a long term, and stable brands to ensure that the financial health is very, very strong. Their claim paying ability is strong. They have covered maximum number of lives, not a small number of lives. They have paid out good amount, 95 plus percentage of claim paying ability. Of course, most of them are 95 plus claim paying ability, which are there, and covered large number of lives. It's not just, there are a lot of companies who cover around maybe 100,000 lives, but have they covered 1 crore lives, 50 lakh lives, right? That's a large number of lives being covered. Those companies have a lot of experience kind of doing that. So consider these factors before you kind of settle down on buying a protection term life product. So what I'll do here right now is I'll stop here, and we can go into Q&A from this. Okay, so we have a lot of question. What happens? I think we can, the moderator can take some questions, but I will answer some questions which are coming in the chat box. So what will happen if a person discloses wrong information about himself? What happens for his claim? So the contract, I said, for life insurance is based on good faith. So when an insurance company asks you all the details and questions that they ask you, and if they were to, if somebody lies about it, obviously the claim is going to be under question, and uh, that's not desirable, right? So it is basically, it's important for you to disclose that what is your health status. Even if you have diabetes, hypertension, don't worry, disclose it, which is there. And after, if it's, they will charge you a nominally higher price, which is there, but it's far better than disclosing it wrong, which is there. IRDA also has clear directions on what will be the plan for, in terms of how things have to be handled. But as a customer, as an individual, you should always disclose that whatever health conditions are there completely, to ensure that your claims are guaranteed. If you have disclosed all the details completely, your claims are definitely guaranteed. Don't have to worry. Secondly, there is, you should take that out of your mind, that there's a question on your claims, because you're paying these monies for the claim and it'll get done. You don't have to worry. If you lie about these things, obviously these claims will come under question, investigation, and definitely will not be supported. Do you recommend to pay premium for 5, 10, 15, or 20 years, or till insurance plan works? If we take a coverage till the coverage, and then inflated premium will become minimum, which is better, you feel? Okay. So premium, two things I want to say. The choice of premium, till when I want to cover myself, that is the first question. The second question is how much long do I want to pay? So I will answer these two questions separately. First question is, should I cover myself up to the age of my earning age? Because after that, I don't get any money. I only get, retirement money back, right? I'm not earning. So there's no financial loss. So you can cover up to the age of 60. That's the first option. If you're only worried about financial loss, your premiums will be cheaper. But if you want to leave a legacy for your family, then you can cover yourself up to 75 or 85. That means you know that you've taken 1 crore of rupees of term insurance plan, and you know that up to 60 you're earning, and anything happens, the money is there to support your family. After the age of 60 or 60 to 65, your family is settled, but this money will be used, tax-free money will be given to your family to ensure that they get a tax-free income as a legacy. Then you cover yourself up to 75 and 85. The price is higher. Please note that. This is in terms of how long you have to cover yourself. Now, how long you have to pay is the second question. You can choose to pay for 5 years, 10 years, 15 years, or 20 years, or whatever they may be. But I believe that if you affordability is the question, but don't try taking a plan where you pay after the age of 60 years, because you won't be earning after 60 years. Take a plan in such a way that you pay, if your age is 30, take a plan where you only pay up to the age of 60. After that, the coverage should be there, but you don't have to pay. Take a plan that way. Or if you can afford it, take a plan for 5 years, 10 years, 15 years, or 20 years, right? That is how you should look at it. So you want to pay the money and get done with it, definitely take a 5-year plan, works for you. Or take a 10-year plan. I think, but taking a 5-year plan, you get a bigger discount, but it pinches your pocket a little bit more. That's all I would like to say. So some people have asked me a question on what will be the premium of a 10 lakh CI and a 50 lakhs term. I think you can check with your relationship manager. He can guide you because we need a lot of information of your age, if your habits, to be able to give the price, right? So I have a question here related to critical illness. Is basically, if someone has critical illness, is a health insurance rider, he takes critical illness rider from here. So how will be the payments? Yeah. And there's another question of what stage will I get it, and so on and so forth. I'll club both the questions. This is from Hitesh Gandhi and Manish Singh. These are two questions, and I have a lot of questions from Hitesh Gandhi here. So I will take some questions of him, Hitesh Gandhi here. So a critical illness plan is in the event of somebody having a heart attack up to a particular degree. Of course, there is some technical measure of somebody having, there are heartache is something which you call, which is there. That is, may not be classified as a heart attack. Somebody having a proper heart attack, and there are some technical definitions that doctor, this one disclose there. If somebody has a heart attack and it's technically chosen, is identified as a heart attack, the full money is paid out on diagnosis, and basically a discharge summary is given to us, and we will pay the total critical illness benefit to the individual. So it is in a way, the definitions are standardized by IRDA, and based on the definitions of IRDA, the payments are made in line with that. So this is how the design is clearly done. So I hope that, and you don't have to give reimbursement bill. So if you're covered for, let's say, 50 lakh rupees for this, and you have another, let's say, a Mediclaim plan for another 5 lakhs or 10 lakhs, irrespective of the Mediclaim policy that pays or does not pay for your hospitalization or your medical bills or your hospital treatment is a different matter. We will simply give you this 50 lakh rupees on getting diagnosed, and up to the levels that are being defined as per IRDA and the policy document. Once being diagnosed, you will get these payments. So in a way, it is simpler for you to do that, and that's how we have designed this. As discussed, if another question here, can you share the PPT? This will be available to the IIFL team. You can share it. Any good plan for more than 60 years? So I would say that if you are a person who's working, usually businessmen and doctors are working for more than 60 years, yes, you can take a protection plan here. But if you have income and you have income to support, you can take a plan for this. Medicals will be mandatory for you. You can take it for payment for 5 years and get coverage up to 75 years or 80 years as you think appropriate. But the price will be expensive. And I think you will have to undergo a medical examination before you take this. I presume Mr. Arpit Agarwal, the question is from Arpit Agarwal, right? Yeah. So there's another question, and this gentleman is already a customer of iProtect Smart, and he's taken a critical illness. He's already taken this. It's an anonymous question. I already have an iProtect Smart term plan with critical illness. Term plan, can I? He does not have a critical illness. He wants to include the critical illness right now. So what you can do is that if you already have a term plan, you will have to take an addition. In the current plan, you cannot take it. You will have to take a new plan, and under the new plan, you can definitely add critical illness. The minimum base sum assured you should take is 50 lakhs, and then you can add any amount of critical illness that you want, 10 lakhs, 15 lakhs, 20 lakhs, as the case may be, you could take it up. Yeah, okay. Gaurav C has asked me a question. What happens in the case if the policy is bought in India and the death happens overseas? Will my nominee get the claim? The answer is yes. The product is purchased in India. If you're an Indian, you purchase in India. Even if you're an NRA, if you purchase in India and you continue to pay your premiums, unfortunately, if the death happens in any country which is there, your death benefit is covered. If you are in employment in any other country, you're an NRI and you're in employment in any other country, please disclose that. There will be specific underwriting on those lines. Usually countries like Dubai, UAE, and Singapore, and so on and so forth are covered, not to get worried. If the death happens, there's nothing to get worried. The claim will get paid out. The documentation requirements are similar, so the local country's documentation of death certificates, so on and so forth, will have to be provided. Critical illness may not be available for people in some countries, depending on the type of countries. Right? Okay. So this is a very different question. If husband has rental income and wife is a teacher, then they're eligible for joint IPS. Oh yes, they're eligible for joint IPS, but this will be based on income proof provided. So if the ITR is provided and based on the income tax return, the eligibility is identified, and you will be in a position to get a joint life plan there, and your incomes will be taken together to give the plan. Is the money safe with private life insurance companies? The next question. Yes, the so if you have invested, IRD has very stringent rules for life insurance companies which are there. Now, life insurance companies in India, private life insurance companies in India, have been operational for over 20 years, and the regulation for governance by IRD is extremely stringent. And whenever a company has been taken over or not been able to perform, the larger companies have come in and kind of taken over the liabilities, or IRD has instructed, so on and so forth. Um, I don't want to get into names, you can read it in the papers. So the solvency ratios and capital requirements that are mandated by IRDA are very stringent. And secondly, policyholder money and shareholder money are kept separately. That means your money is kept separately for management, and that's the reason you should consider that. And so, yes, the answer is private life insurance companies are safer. Safe. Yeah. Can we take more than one term plan? The answer is yes, as long as it meets your income criteria. That's anonymous question. Yeah, Ashish Shah has asked a question. Critical illness benefit is paid only once during the policy term, or can it be paid more number of times? So the answer is, if you choose a critical illness benefit of, let's say, 50 lakh rupees, and if you contract any of the illnesses other than angioplasty, it is paid out once. Angioplasty, if you contract, which is the maximum sum assured under angioplasty is only 5 lakhs, then 5 lakhs is paid out, and the sum assured reduces to 45 lakhs. Then if you have a heart attack again, separate again, then again 45 lakhs is paid out. Right? That's how it's designed, which is there. So in simple, the payout is only once, not multiple times, and for that illness. What is a good combination? Which combination is good? Term plan plus endowment plan, or term plan and ULIP plans? I would see, these are questions specific to your requirement after assessing your risk, and is an anonymous question. Depending, term plans are simpler, and it's in line with your income, in line with your liabilities which are there, and expenses. So your sum assured is directly proportional to that. As far as the investment plans are concerned, you should consider the risk appetite that you have, and then either an endowment plan or a ULIP plan may work out for you. That has to be identified clearly. Sagar has asked me a question. Critical illness 34 totally covered up to sum assured. So yes, all 34 critical illnesses are covered under the plan. The maximum sum assured available is 1 crore. So Srini Rao has asked me a question. I think he's joining from somewhere else. Person staying abroad in another country, can he purchase a term plan in India? Currently, no. In the past, we were offering. Thanks to COVID, unfortunately, we can't offer this because we don't have predictability. But things become better, we can consider that. But he has to be Indian citizen or an NRI. Can defense person can take a term insurance plan? I protect plan. It's a difficult question because it depends on what stream, if somebody is working, and it will be you can apply for a term plan. Our underwriters will evaluate the plan based on the role that you have in the defense, and then can be provided, right? So if you're in frontline duty, or in the borders, or you're in active duty, may not be possible. But if your role is different, it may be possible. Getting two different term plans, is it beneficial at same point of time? My answer is no, because if you buy it from let's say you buy two products for 50 lakhs and 50 lakhs, your price will be higher. You will not get the benefit of just buying 1 crore because the price becomes lower. As you know, if you buy a bulk product, the price becomes lower, as you know. So if you're buying 500k, I'm giving a very different example, 500 kgs of any product, 500 grams of any product of, let's say, washing powder or whatever. And if you buy, let's say, 5 kilos, the price is drastically different. So the similar things apply to us. There's another question. They both file ITR. Who will be the initiator, wife or husband? The initiator can be wife or husband, but whoever has got the higher ITR preferably should be the initiator. So somebody's in Canada. Srini was asking it for somebody in Canada. So I told you Canada is difficult right now. It doesn't work right now. Okay, so there's an anonymous question saying that what happens actually due to lack of awareness of or importance of insurance plan. They think it's a wastage of money, useless expenditure. How can this be tackled? My suggestion is that for people, see, we are in India. There's a large amount of people who say that I only give money, I don't get anything back. We totally understand that segment of people, and specifically designed for them is the IPS money back, where the money they get the life cover plus they get their monies back. I think that's a fantastic plan. You should consider this for the people who are there. Yeah, Sanjeev's question is very similar to the question I answered earlier. He bought a plan today. He bought a plan in India today. He's migrated to UAE, NRI, and then he happened to die. Will he get a claim? Yes, he will get a claim. No problem. Rajesh Nair, is the premium difference vastly in regular plans versus IPS NRI Protect? No, the premiums are the same. The underwriting process are different. So for NRI and for regular people, the premiums are the same, and that's why I said our premiums are very, very good compared to what the premiums are abroad in other questions which are there. Okay, so this is what I had kind of put across, and there was another question which I think was not so. Uh, uh, which is there. Somebody paid some money and bought somebody, it's another PSU insurance plan being bought and did not get a large sum amount of money when somebody died at the age of 44. So I think somebody bought a plan for savings. That was a saving plan. That was not a term plan. If you buy a term plan, the amount of money is small. You get a significantly large benefit. I think we have paid a lot of claims, and I think there's a lot of people who have benefited. Even with IIFL Securities and IIFL Group, we have settled a lot of claims. So I think you can refer to the website where we have paid out the claims, and we paid more than 98% of the claims. So that's useful for you to know. And in developed countries, term plans are very, very popular. India's awareness levels have increased drastically over the last 4 to 5 years, and I think it's useful for us to kind of more aware customer, more appropriate customer will be more interested in buying a term plan. If there are customers who are finding that they're not getting anything back, then please do offer them a money back plan. So one last question. It's already 5 o'clock, and I just like to take the last question. Is I Protect plan not applicable in all countries in short traveling like holidays or work? If you're in India, if you can take the plan, right? And wherever you travel, you're covered. If you are in India and if you go for a holiday, you're covered. Don't have to worry about it. This plan is designed for 30 years, 40 years. So if you do a short travel or you go for a 1 year assignment, not an issue, you'll be covered. And you don't need to inform us also if you've been a resident of India, working in India, not an NRI, and subsequently get a need to go and work abroad or travel abroad for a short period of time. You don't have to inform us also. You will be covered. And the country list is not relevant in that case. So I think I've answered all the questions that were there. So we have spent a good amount of time. I'm hoping that most of your queries are answered, and I'm sure that the IIFL team, RMs are on the call, and they should be able to support you to kind of custom build the plan that you require, whether in terms of sum assured or how long your coverage should be there, what is the how long you should pay, what are the should I take a critical illness add on or an accidental death benefit add on, what value should I take, and what's more affordable for me. Should I also cover my home mortgage? Should I cover my child's plan? All of this, the team can kind of give you specific one-to-one advice on your for each and every individual um, person on the call. And that's all from my side. It was a pleasure being on the call and talking to you guys. Parag, anything from your side? Any other questions, or we can conclude?
Thank you so much, Vivek, for all your support and taking us through the benefits in detail. Thank you everyone for joining in and patiently hearing us. So looking forward for any particular query for the insurance, you can get in touch with me or Ruchita, my colleague, and we also have Aziz and Vinny from IPRU team to support us. So do let us know offline for any further query. Thank you so much
Thank
from my
you.
side.
Thank you very much. Thank you very much. Thank you.